All right, hello everyone. Let's go through my portfolio for the week. Today I am up $90, and in the after hours I am down $1.70. So what's going on is that a lot of people are still worried about the tariffs, or a lot of people are worried about this China trade, U.S. and China trade war is still going on. There's a lot of volatility in the markets. I think the Dow Jones, for at least the start of the morning, was down almost 1,600 points, which was very, very volatile as far as the markets in 2 days down 1,600 points. I thought that was really just insane. But yeah, so a lot of fear in the markets. Obviously, people are still looking at interest rates. People are looking at the trade war. I think the trade war is what's really doing it. A lot of investors are freaked out. There was a jobs data that came out this morning, and I think a lot of investors were looking at that to see if job revenue was still going up. Are jobs increasing, or are jobs are going up like the administration says that they are. But yeah, today $90 and 47 cents. It was a pretty good day. The Dow Jones rebounded. We're just going to talk about some of my stocks in the portfolio. We have Apple still going strong. They had a recent dip yesterday, and then it kept dipping today, but they're starting to recover back $174. Total return, I'm only up $8 on the stock. I was really up on Apple. I think when it got up all the way about $230, I think I sold around $220. I jumped right back into Apple. That's what you want to do, guys. You want to buy low and sell high. I think I sold it somewhere up here, and then I bought back down here. So you buy low and sell high. That's the way to go as far as trading Apple. Apple's the only tech stock in my portfolio. I just like them a lot. I like this valuation. I like Microsoft more than Apple, but right now Apple's valuation is just screaming a buy to me. So that's why I bought them. Costco, $233. Costco is really just going insane here. $116 for a total return. Average cost $221. Very good business. I like their business model. I like the Costco pizza. I shop there. I like their revenue growth as far as the warehouse memberships. Just a pretty good stock in general. They don't seem to be affected by this whole market noise, the China trade war. They just don't really care about that. I mean, the stock has gone down. It has gone down from previous highs. The stock was $239, and now the stock on November 21st, 2018, got all the way down to $218. But if you can buy some shares of Costco, I know that the stock is overvalued, but again, guys, it's really a good stock to buy. It's overvalued for a pretty good reason. The reason why they're overvalued. Dominion Energy, $74.78 for today. I was looking at NextEra Energy, but NextEra Energy is like really, really expensive. So this is an opportunity for me to get a above average utility stock for a decent price. Pretty good competitive dividend. I think that dividend yield is about right. I think it's above around 3% or so. I would have loved to buy Dominion Energy when the stock really dipped down. When around June 5th, 2018, the stock got all the way down to $62. That was a super sweet deal to get those get shares from that company such as Dominion Energy. It's a good utility stock, guys. I like this utility stock. I like Southern a lot, and I like NextEra Energy. Johnson & Johnson has made another entry back into the portfolio. I've been talking about Johnson & Johnson for a long time now. Really, really good healthcare stock. I'm up $4 on them. Average cost $145. Overvalued. This stock is very, very overvalued, guys. I know a lot of people are just looking at me and saying, what are you doing? Why are you buying a stock in its highs right now? This stock got all the way down to $120. I actually did buy the stock at $120. I think I sold somewhere right around here when the stock reached $140 and the stock kept going up. So why did you buy it? Why am I buying Johnson & Johnson? Well, for one, they are the Amazon of healthcare. They're just a very, very big company as far as healthcare products. I think they do sell some pharmaceuticals, but a giant healthcare a stock that's just diversified everywhere. If you go into a retail market, there's a pretty good chance. If you're looking for anything health related, there's a pretty good chance Johnson & Johnson's going to be there. Yes, it's overvalued, but they're a dividend aristocrat. I trust my money. I trust Johnson & Johnson. That's the thing. See, I had AbbVie in the last couple of videos, but I'm not really too high on these pharmaceutical stocks. I just like Johnson & Johnson a lot. And, Warren Buffett always says, you can't look at the price of a stock. That's not investment. investing. So just looking at the price of a stock is not enough to say to yourself, oh, okay, this isn't real investing. I'm just going to look at the price of the stock, and just because the stock is down, I'm just going to buy it. No, that's not investing. I bought the stock based off the fundamentals of the company. And the fundamentals are still strong with Johnson & Johnson. They're a dividend aristocrat. They're a giant healthcare provider. Just solid all around, guys. That's the reason why I like my money sitting in Johnson & Johnson. McDonald's, $185. They are spiking up still. Total return, $204. Pretty good stock. It's another dividend king, I guess. They've been paying their dividends for as far back as I can remember. 10 shares. Not much to say about them. Great discretionary services stock, a really good company that keeps the train moving, keeps my portfolio happy, I guess. 3M, total return for 3M, $54, and then average cost of $187. I really wish I just would have kept my shares. I had bought 3M when it got all the way down to like 187. I bought them right here, and then I remember selling somewhere right here, and the stock kept going up. So again, D3M is another dividend aristocrat. It's diversified industrials. I really like them a lot. If you're really serious about, start generating a income dividend portfolio, I think 3M just has to be there. They're so diversified in the industrial industry. Just a really good stock in general. And I like how the CEO of 3M says that he wants to kind of improvise a little bit. He's looking forward to the future. He's looking forward to sort of just creating more cash flows and revenues. He wants to try some new stuff and bring some life to the company. A lot of people or a lot of investors thought that company was kind of just losing a spark a little bit, but they got some good plans going. Procter & Gamble, $93. So Johnson & Johnson and Procter & Gamble have re-entered into the portfolio. Why are they re-entered into the portfolio? Because they're good stocks. I like their fundamentals, and most people say you're buying into the high. Why are you buying into the high? Procter & Gamble is $93. The thing is, the reason why I'm buying to the high is because I just have a long-term outlook with them. I should have never sold these two stocks to begin with. I was up on Johnson & Johnson, $200. I was up $150 for Procter & Gamble. Now I'm down $1 because I bought into the high. But this shouldn't matter. This shouldn't matter if I have a 10-year outlook, and that's what I should have had when I bought these stocks at their corrections. Johnson & Johnson, $120, and Procter & Gamble at $75, $70 to $75. Those were still buys, and I kept telling everyone, buy these stocks. This is the stocks that you want to buy. Procter & Gamble, one of the best consumer staple stocks on the market. Phillips 66, I really like this average cost of Phillips 66. The thing with Phillips 66, the reason why I bought them I bought them over Shell and Enbridge. I was looking at their diversification. They're very, very diversified in the energy sector. A lot of people say, well, I was actually reading up on a company, and I'm like, do they just do refinery? Like, what's going on with Phillips 66? And I find out that they don't. I think a refinery only accounts to 30% of their revenue. 30%, guys. So the other 70% is being allocated towards, chemicals and materials and all other kinds of stuff. And I just like that sort of diversification with Phillips 66. There's a really undervalued company, a company that's really been getting hit hard as of late, thanks to the oil correction. A lot of oil stocks are at pretty good buys right now. This is the time to be buying oil if you're into utilities. Not utilities, if you're into energy sectors. Visa, $140. Visa's back in the portfolio. They're sort of just taking the place of a financial stock, sort of like a financial bank stock. I guess you could say this is a tech stock too. So it's kind of like a tech / financial / bank stock. It's kind of weird, but I know a lot of banks right now are getting hit hard. JP Morgan got hit hard today. Bank of America got hit hard. Visa average cost $138 for a total return of $19. It's a grower. It really keeps the portfolio train moving. I guess the only other grower in my portfolio is Costco, and Costco and Visa are growers. They sort of, provide that growth opportunity for the portfolio to keep spiking up, and I like them a lot. A lot of people have a Visa card and a MasterCard. I like Visa a lot because their valuation is just more attractive to me. But, pretty good stock. Verizon, $58, $58 for a total return of $22.91. Average cost $56. 20 shares. I've been trimming Verizon shares a lot only because it got so high. I think the stock got all the way to $60 or something like that. It was 52-week high at $61. I was trimming my position. I was taking the money. I was putting the money elsewhere, but I did leave some shares. 20 shares. It's a pretty good amount of shares that I had. What I've also been doing with Verizon, it's been buying like put options and call options. I've been doing a lot of put options and call options. You can see right there. You guys can see what I've been doing. Market call option. There's some puts. There's some sells. I've just been selling. I've been buying. I've been very, very active with the stock and just making passive income off those contracts. So I think today I traded a contract. December 6th, call option, buy 122. Call option, sell 126. So I only made $4. But I wasn't really sure if the market was going to tank back like it was doing. I think the Dow Jones was down like $400. Excuse me, the Dow Jones was down 400 points when I made that sell call. But yeah, I mean, I don't know. I mean, it's passive income. I like trading Verizon because they're not so volatile. Obviously, you want to try to like buy a put right here so you can really make money off of it. So for the stock going down, and it didn't have a good day, but whatever, it doesn't matter. All stocks didn't have a good day today. That's going to do it, guys. One thing I will say about this portfolio, there's 10 stocks in the portfolio, and that's the exact number that I like to be around is 10 stocks. But another thing I'll say about the portfolio, this portfolio right now is completely diversified. Everything is here. You have tech, you have discretionary retail, you have utilities, you have healthcare, you have discretionary services, you have diversified industrials, you have consumer staples, you have energy, you have banks and financials and technology again, and you have telecom. This is completely diversified, I think. This is a very, very solid portfolio makeup. There's a lot of defense in here, and just in case the market tanks. Johnson, there's a lot of dividend aristocrats that continuously pay dividends. I think every stock in the portfolio pays a dividend. But, there's a lot of offense in the stock. There's a lot of offense in the portfolio as well. You have Visa, which is a high growth stock. Costco's growing at an incredible rate. This is probably the most solid portfolio I put together, and I was looking at a couple of videos, a couple of past videos that I was making, and I noticed that I had like the perfect combination. I was like, I looked at it, I said, I have Apple, I have Johnson & Johnson, I had Starbucks, I have Procter & Gamble. I have some really, really strong companies that work together, that sort of help each other on down days and on the days when the market is like super green. So complete diversification. I think the only thing that's not in here is real estate investment trust, my REITs, which my Roth IRA has a lot of REITs in it. It has a lot of REITs, and that's the reason why I've chosen not to put real estate investment trust into this portfolio, because I have a lot of it in my Roth. But this is complete diversification, guys, amongst the market. There's some really good stocks in here, some really good blue chip aristocrats, some really good blue chip safe dividends that are going to continue to pay that dividend as long as I hold on to the stock. I think I'm not going to be doing any more trading, guys. I know I had Wynn Resorts, and then probably in the last video, I think Wynn Resorts got to like $119, and then it dipped all the way back down to $110. So that's the thing about these casino stocks. They go up really fast, but they also go down really fast. We do have like the Microsofts of the world, the FANGs of the world, but I just like Apple a lot. I'm just going to leave Apple in the portfolio. I know Apple is probably going to go back to $200 soon. But anyway, guys, I'm going to cut the video here. I just want to explain what I've been doing within the portfolio. Once again, one more time, you guys can see my portfolio in a nutshell. I would say Costco is sort of like the breadwinner here. They really just been tearing it up, $116. I just think it's a really, really good stock. I know McDonald's is putting in work. Visa's back in the portfolio just to keep that stability growing, keep that growth growing up on the upside a little bit. I think that Phillips 66, a very, very attractive buy at $90. That stock was once $120. Dividend aristocrats back in their portfolio. Procter & Gamble, 3M, and Johnson & Johnson. Yeah, guys, this is probably the best portfolio I've ever put together, and I'm just going to leave it the way it is. So that's going to do it, guys. Again, $90 for the day. In the after hours, I am now up $2.30. That's what we're going to do it. I'm going to cut the video here, and I'll see you next time.